Welcome to this special edition of 7 Day Yield. I'm Mitch Rochelle. Fears of globalization have sparked a new wave of nationalism. How pervasive is this trend, and is it contagious? 7 Day Yield's Lydia Marsh sat down with PwC's Global Investment Opportunity Practice Leader, Dr. Alexis Crow, to explore that and more.
So we saw during the campaign cycle this rise of nationalism, and with the new administration coming in, how is that likely to impact global businesses?
Obviously, this has implications for the future of globalization and global commerce. For the first time, really in history, we've seen the business community not necessarily aligned with a Republican candidate, and so that's provided with a unique set of circumstances for companies to be able to navigate emerging markets. So after the election, we've seen emerging market currencies tumble for a number of different factors relative to the dollar. So the first is looking at an expectation of a Fed rate rise in December, which two futures markets point this morning to 90%. The second factor being an expectation of fiscal stimulus with the new president once he's in office. And the third being this rise of populism and the rise of the right in Europe, which by no means has ceased with Brexit. So all of these complications in the developed economies are pushing a stronger dollar. That in turn has a deleterious impact on emerging market currencies, and that has implications for global investors, positive and negative. So immediately after the Trump victory, we saw a lot of capital outflows out of bonds and emerging markets and equities. But also in the time of a dislocation such as this, it's also a time to invest for long-term opportunities. So one of the things we're doing with clients is looking at the long-term appreciation of assets and enterprise value of the long-term in emerging markets.
You touched a little bit on commerce earlier, and if we look at it from a global perspective again, are trade agreements likely to be maybe renegotiated or revisited?
Well, so one of the most important things I think we've learned this week is that we have to wait for the facts. So we have to wait until the president-elect actually makes all of his cabinet appointments before we're really able to see what's going to happen with regard to foreign commerce. And a lot of the presidential advisors or president-elect's advisors have come out and said to the markets that we're focused on fiscal stimulus, infrastructure spending, tax credits, as opposed to starting a trade war with China.
So is this a sit and wait scenario, or are there steps that companies can take now, both in the US, abroad, while we wait for the administration to get up and running?
I think that the next 3 months leading up to the inauguration will be analogous to the last 4 months after the referendum in the UK, where there is this wait and see mentality, which is good for consultants, not necessarily for businesses. So there's a wait and see mentality. However, there are certain things we can do. So investing long term when there is a dislocation in emerging market currencies is one, by investing in operations. The second is to be able to look at other potential regional groupings and opportunities that those might yield.
So any final points that you can leave our listeners with?
In every dislocation, there's an opportunity. So I look to some of the Fortune 500 companies who have said to whatever president came into office, this is a time for unity and to unite a divided country, and I think that's of the utmost importance.